Hello, everybody, and thank you for joining me today. It's Alan Barry Labakan with the Rocks and Stocks News Show. This is my weekend edition, and it is the 14th of December. Man, this year has flown by. It's just about 6 o'clock in Central Time, so 7 o'clock Eastern. And let's get right into it. I'm going to first, I've got some topics that I want to talk about. A few news releases, and I'm going to use some of my picks as sort of case studies or ways to um, enhance arguments I'm making. So, first of all, this week we had the Fed cut with more to come. I know there was dissenters. There was three. One was Mirren, who wanted a bigger rate cut. Two that didn't want a rate cut, and four of what they call soft dissenters that were kind of on the fence but went with the crowd. Um, but I think future rate cuts are a foregone conclusion, including the January meeting. Uh, Chairman Powell only has three more meetings left before he's gone. And then the new guy will come in, and that hasn't been announced yet. But I'm certain that that person will be a extreme dove as Trump is campaigning for the idea that interest rates should be about 1%. So that begs the question, why does Trump think that we need free money? Obviously, something doesn't jive with his argument about the strength in the economy and others of his economic rhetoric. But I think that the next guy will be very accommodative and get the interest rates back towards free money, which is very bullish for gold because it means that inflation is going to get much stronger. The the other thing that got some headlines, but I don't think enough, was the announcement that they're starting QE as of the 12th, so a couple days ago on Friday. It's going to be maybe why it didn't get as much attention because they're talking about 40 billion per month for the next few months. Uh, I don't think it's going to be that minimal when they're changing course from trying to get the balance sheet down more, and they started that process at about $9 trillion, and now they're down to over six, and they've thrown in the towel and are now getting back into the QE business. And I think ultimately they have to manipulate the yield curve and also pump liquidity into the market. And so I think this is just the early days of another series of quantitative easing. They'll probably not call it quantitative easing. They'll use some term like balance sheet adjustments or some nonsense like that. But make no mistake about it, they're back into the QE era. The Federal Reserve Chairman Powell, in his press conference, talked about inflation being somewhat elevated. I can't believe the way that they sort of insult the intelligence of people, but they get away with it because of the Fed. And the reason that I say that, somewhat elevated being nonsense, is because it is still 1% above their 2% target rate. So all of that effort to try and combat inflation has they're still a percent above their 2%. And that's using the government statistics, which consistently understates real inflation. Just ask consumers out there. They feel the pain. And that's why there were in the recent election, they went with the candidates that were talking about affordability. It's not affordable, and that's the scenario we're in. Basically, they're throwing inflation under the bus because the jobs market is very weak. And again, you've got a situation where the government numbers overstate the jobs market, and even Powell in this press conference said that he thinks it could be as much as 60,000 jobs per month. And you start factoring that into previous months, you can't get the October ones because they've canceled those. We've dipped into negative territory in some of the recent months. So, yeah, they don't seem to be worried about inflation because they're more worried about the jobs market. And at the end of the day, what that tells you is they're failing at both sides their mandate. They're not, the jobs market is too weak, and they're throwing inflation under the bus despite it being 1% above their target rate. So that is the situation we have. Gold and silver are in a perfect storm as the stagflation genie is out of the bottle. When I talk about stagflation, I use a more realistic idea of it. There is a lot more inflation in the economy than the government numbers suggest. And I think there's less economic growth in the economy than the government suggests, numbers suggest. So I think the real stagflation is quite significant already, and will get more so. Adding to the current drivers that are bullish for gold and silver, such as the broken fiat currency and debt system. Central bankers see that and are loading up on gold. Other factors, the death spiral of debt, unsustainable cost of servicing the debt. Many central bankers are returning to the gold standard. They now own more gold on their balance sheets than they do US debt. So, if that's not a return to the gold standard, I don't know what is. Gold, silver, and copper are primed for fantastic 2026 as demand is powerful. In gold, that's due to the above drivers that I already mentioned. And I think the ultimate realization that gold is the soundest money, and a good way to back the broken fiat and currency and debt system. Plus, and this is not as well talked about, but I think it's going to prove to be a great currency for global trade. If you were basing your trading on gold compared to many fiat currencies, including the world reserve currency, I think it is a much better currency to back up global trade. And I think we're going to be seeing more of that. It's already, the infrastructure is already being built in China. And I think you're going to see more of that. Um, Silver has the benefit of being a monetary metal as well as its industrial benefits. One of the key ones for that is the solar energy. But there are other uses in technology and other things. And ultimately, all of that demand has created a long-term supply deficit going into about 5 years now. And that isn't going to change because as demand keeps growing, there's not really any new mines coming online. There's nothing really in the development as part of the supply chain to replace let alone increase production, replace old mines with new mines, and also increase production. It is hamstrung by being a lot of it being produced as a byproduct of other metals. So, they're not going to turn up the production because of their base metal mines because they want more silver. It doesn't make that much of a difference to the bottom line. And so this long-term supply deficit is going to be with us for a very extended number of years. Um, Copper also has remarkable demand and is heading into a supply deficit. Some Wall Street analysts are talking about 500,000 tons in 2026 to as much as a million. And so I think that gold, silver, and copper all have very bullish supply and demand arguments. But what I really think the market needs is a wake-up call for the precious and base metal stocks. When it comes to things like gold and silver miners, I think that whether you look at the majors, the mid tiers, the junior miners, the developers, and the explorers, I still think that they're being valued like gold and silver are about half their current prices. So they have a lot of catching up to do just to catch up to the current prices. And by the time they catch up to the current prices, the prices of the metals are going to be much higher. So let me go into some charts before I go into some news releases that I wanted to talk about. Uh, First of all, we have gold having peaked at 4,400. This is, by the way, this is the futures price, uh, courtesy of FinViz Elite, where I'm an elite member. And for the price, it's phenomenal. Gives you great charts and very inexpensive. So as you can see, bottom left, top right, um, peaked out at 4,400, had a basing period here, strong breakout. Basing period here, strong breakout. You can't see it, but back here was another uh, basing period and another breakout. The breakouts are getting stronger, each one that happens. And after this run to 4,400 that basically started in August, late August, when the Fed um, telegraphed that they were going to cut rates. And I think the market started to anticipate that stagflation is that genie is out of the bottle. It ran from about 3,400 to 4,400. It gave back some of those gains in a fairly quick period of time, but then it had a good strong base here at about 4,000, had a breakout, another small base at around 40.72, another breakout which was above this previous high. So you've had a higher low, a higher, a higher low, a higher low, a higher high, a higher high, another base, and we're in the midst of another breakout that I think will take it probably to 4,500 or better by the end of the year. Like I said earlier, all of the drivers are green lighted, and I think that that's going to take gold a lot higher. Silver, let's have a look at silver. Also, this one really, it was kind of going sideways for a long period of time, and then June started its breakout. I talked a lot about that 3,500 or $35 level, and my speculation that it would break out above 40. It did quite aggressively all the way to 52, gave back some of those gains, created a nice base at around 47, had a nice breakout to the height of this peak, had another consolidation. So this looks like a short-term cup and handle. Then it had its handle base and has had a spectacular breakout. I think what the market is finally starting to understand is that we've had a long-term, multi-year deficit in the price in the supply of silver compared to the demand. The demand keeps on growing. Solar energy is one of the great ways for these artificial intelligence data centers that are competing with the cryptocurrency mining to get that immediate energy that they need. So I don't think anything is happening on the demand side other than it increasing at a higher pace than what the some of the leading groups that do estimates on demand, they seem to be getting it wrong consistently year after year. And so silver is looking beautiful, and copper is, I think, going to have a stellar 2026. After we got through this spike because of Trump talking about putting tariffs on copper, and then after he announced that no, they weren't going to do copper, it had that round trip, but then it's found its base at about $4.40, and since then has made a series of higher lows and higher highs, and coming into 2026, where it looks like copper is going to head into a very significant supply crunch that will extend for many years. I think copper is going to have a wonderful year. But again, I think the real wake-up call is in the equities because they're still being priced as if gold, silver, and copper are much lower than they are currently. And so I see that the real great play for investors is in the stocks. So I'm going to turn now to the some really great news that came out today for one of my picks, which is Equinox Gold, one of my mid-tier picks. They announced the sale of their Brazil operations for total consideration of 1.015 billion, focusing on near-term North American growth. Uh, they talk about having agreed to sell 100% in their Arizona mine, RDM mine, and Bahia complex located in Brazil to a subsidiary of CMOC Group for total consideration of 1.015 billion. Under the transaction, Equinox will receive upfront cash of 900 million due on closing, subject to customary adjustments, and a production lead contingent cash payment of up to 115 million 1 year after the closing. So they get 900 million right up front. Closing is expected in the first quarter of 2026, subject to regulatory and other customary conditions. So Darren Hall, who's the CEO of Equinox, stated, and I quote, "The sale of our Brazil operations is a pivotal step to position Equinox as a North American focused gold producer underpinned by robust cash flow and a tier one growth profile. The proceeds will transform our balance sheet and immediately strengthen our financial position by fully repaying our $500 million term loan and $300 million Sprott loan and reducing our revolving credit facility. This will greatly reduce interest expense and enhance per cash flow or per share cash flow. The company will have enhanced flexibility to self-fund organic growth and consider capital return initiatives within a disciplined capital allocation framework. Monetizing our Brazil operations simplifies the portfolio and enables the company to deploy capital toward higher return, lower risk, or organic growth opportunities in Canada and the United States by concentrating on our long life assets, including Greenstone in Ontario, Valentine in Newfoundland, and Labrador and Castle Mountain in California. We position the company to deliver stronger margins and sustainable returns. With Valentine ramping up, continued performance improvements at Greenstone, and steady contributions from Mesquite and Nicaragua, Equinox Gold is positioned to drive long-term per share value for our shareholders. End quote. Then they give you more data. Some of the highlights or the rationale highlights our balance sheet strength, significant immediate debt retirement, and materially lower interest expense, portfolio focus, concentration on long life, lower cost assets in our tier one jurisdictions, growth capacity, ability to self-fund expansions and exploration from cash flow, shareholder alignment, enhanced ability to consider disciplined capital returns initiatives. Now, for me, I think that some of the reasons that folks weren't super bullish on Equinox like me was because of the debt situation. And I had confidence that as their Valentine Lake project got into full commercial production and Greenstone, that cash flow would help them rapidly pay back the debt. But now they don't have to do that. So it removes a significant amount of their interest payments by reducing that debt by what was it, 800 million? What did they say here? Yeah, 500 on the term loan, 300 on the Sprott loan. So that gives them very manageable debt that probably could be paid off in a quarter or two of full commercial production from both Valentine and the Greenstone mines. And so, the word transformational gets thrown around a lot, but I do believe that this is a transformational deal that immediately gets rid of that overhang of the debt and the interest payments. And now they can use their free cash flow in much more growth-oriented ways. And so, really bullish on this news. Let me clean up my chart here. I have too many indicators on it. I'm a pretty simple guy when it comes to stock charts. And let me clean this up, and then we'll be able to get on with the look at the EQX chart. EQX for Equinox. We'll use as I'm a good Canadian boy, we'll use the Toronto Stock Exchange listing. So as you can see, um, I picked it down here at about 750 when it dipped down because they were having some growth problems at their Greenstone mine. And then they brought Darren Hall in, and he almost within days or a few weeks made a massive changes at Greenstone, got it right back on track to getting it into full commercial production. And then they were able to get Valentine Lake into production sooner than anticipated. And now it's on a great growth curve towards full commercial production. And as they did that, the stock reacted very favorably. It closed on Friday at $20.23. I'm anticipating a very bullish reaction to this news. The stock is already on a very bullish trajectory of the 50-day and the 200-day. And with this debt situation now covered for the most part, and them moving into full commercial production at both Valentine and Greenstone, I think that the market's going to very much like this news. Okay, the next company up that had news out on Sunday was Alta Copper. I have had covered the company in the past, and they had some very good news out that Fortescue to acquire Alta Copper for Canadian $1.40 per share. They've entered into a definitive arrangement agreement with Fortescue. Fortescue already owned 35.7% of the issued and outstanding Alta Copper shares. The board is supportive of the deal. They talk about highlights being the purchase price represents a significant premium, including a 50% premium to the 30-day volume weighted average trading price, or VWAP, of the Alta Copper shares in Canada, of which was Canadian 94 cents per share for the period ended on Friday, December the 12th, being the last trading day before the arrangement agreement was entered into. It's 100% premium to the 30-day VWAP of the Alta Copper shares in Canada of Canadian 70 cents per share for the period ended November the 7th, 2025. So just a month ago, being the last trading day before Fortescue and Alta Copper commenced exclusive negotiations. It's an all cash deal. Uh, and now they don't have to, move towards the cost of getting the community on side, permitting, technical studies, and all that. Giulio Bonifacio, the president and CEO of Alta Copper, commented, and I quote, "This all cash premium offer from Fortescue is an excellent outcome for our shareholders, given the significant cost and risk associated with advancing the Canariaco project. We believe this represents the right time to deliver a substantial, non-dilutive success to the Alta Copper shareholders and is consistent with our philosophy of delivering returns to shareholders at the appropriate time in the development plan of the Canariaco project." Then they give you all the details. I'll recommend you to read that news release, which is on their website. Let's take a look at the ATCU stock. Alta Copper, there it is. Um, as you can see, they've been performing better since April. Had a golden cross here, and as of Friday, had spent a few months well above the 50-day moving average. My guess is that it trades on Monday very close to that offering price. I don't think that there's going to be a competitor come in for this acquisition because they're already competing with Fortescue, and I think it'll probably be done right around the price that they're talking about. So that's the Alta Copper news. Um, oh, I forgot to bring up Dolly Varden. Sorry, Dolly Varden had some. I just started covering Dolly Varden, and they've already had some important news out. Let's pull up their website. Sorry for the delay. I'll get to their news. And come on, news. Come on, news. Here it is, December the 8th. So about 6 days ago. Contango Ore and Dolly Varden Silver announced merger to create a new North American high-grade, mid-tier silver and gold producer and developer. They've entered into an arrangement agreement to combine Contango and Dolly Varden on a merger of equals basis pursuant to a statutory plan of arrangement under the British Business Corporations Act of British Columbia. Combination of Dolly Varden and Contango would provide investors with a new unique opportunity to participate in upside of a well-funded North American asset portfolio consisting of cash flowing high-grade Manh Choh gold mine in Alaska, as well as several high-grade silver and gold projects located in British Columbia and Alaska, and including the Kitsault Valley and Johnson Tract. I know this Johnson Tract project very well because I've done a lot of homework on it, and it's an excellent project, very high grade, couple million ounces, and has very good potential. Um, when the deal is done, each company will own 50% of the merge co and on a fully diluted in the money basis. Uh, the new company will be called Contango Silver and Gold Inc. and will be led by Rick Van Nieuwenhuis as the CEO and Sean Kunkun as the president and Mike Clark as executive vice president and CFO. They tell you who the new um, board members will be of MergeCo. Rick Van Nieuwenhuis, President, CEO, and Director of Contango, on comment, and I quote, "This merger is an exciting transaction for both Contango and Dolly Varden shareholders, given the complementary and synergistic nature of our North American asset portfolios. With the Manh Choh gold mine providing significant cash flows in a strong gold and silver price environment, the combined company will have a source of non-dilutive funding to advance development of its high-grade Lucky Shot and Johnson Tract projects in Alaska and Kitsault Valley project in British Columbia. Kitsault Valley and Johnson Tract are particularly synergistic as both are high grade, have similar metallurgy, and are located near tidewater and fit the direct shipping ore model. In addition, both have tremendous exploration upside, with Dolly Varden's cornerstone land position in the Golden Triangle, one of the most exciting and prospective mining districts in the world. We see great potential to expand resources and advance Kitsault Valley to production. The combined company will be well financed for growth that is expected to continue to deliver long-term value for its shareholders." End quote. Sean Kuhn, who is the president and CEO of and director of Dolly Varden, he had a great quote. I recently did an interview with him in the last couple of weeks, so I would advise you to take a look at that. He commented, and I quote, "We're very pleased to present this transaction to the shareholders of Dolly Varden. The merger represents a step change for the company, adding production and combining an exceptional portfolio of projects with the potential for high-grade precious metal development. The combined company is poised to become a unique multi-asset platform for silver and gold production, focused exclusively in the United States and Canada. Our respective boards are fully aligned on how to best realize this vision, sharing a commitment to aggressively expand our resource base, accelerate mine exploration and subsequent development across the portfolio, and pursue growth-oriented acquisitions." End quote. So both Rick and Sean had very good summaries of the value of bringing the two companies together. They give you the transaction highlights and strategic rationale. I'll leave that for you to have a look at, and there's a lot of highlights there, so take a look at that. Uh, let's see how Dolly Varden and Contango, hold on, reacted to this news. We'll go to their stock charts and we'll start with Dolly Varden, TV, dot. Uh, this one gives me trouble sometimes. Hold on a second. Hold on a second here. Not Double Valley, Dolly Varden. Uh, Varden. There we go. Here's the Canadian listing. So the transaction was announced here. It kind of softened up on the news, but and then has firmed up. Um, and I think that, these things always take a little while to sort of get priced in. And I would imagine that as the transaction leads towards it being completed, and, with gold and silver doing what I think it's going to do, with both of them having a strong end of the year and strong year in 2026, I think that that could be the near-term driver. And then the longer-term driver is when the two companies merge into the new company. So here's the Contango or Amex listed company. It had a more bullish reaction to the news. I think the news happened right about here. So it's up a bit since the announcement. Had a good day on Friday, up almost 1% to $27.81. Been performing very well since April. Had a golden cross here. And the 50-day moving average is sort of flattened out, but I think it's got good potential to start firming up because ultimately I think this is a good deal for both Contango and Dolly Varden, and the net result will be a company that has current production and a great pipeline to grow their production for a long period of time into the future. So that is the Contango and Dolly Varden. So I covered the news, I covered my topics. We're about a half an hour into it, so I usually try to make this an hour show, and it usually goes to about an hour and a half. But I'm going to try and stick to that hour show today. So why don't I talk about some of the I call it my rocks and not rocks and stocks news picks throughout the food chain in gold, silver, and copper miners stocks. And one of the first ones I want to bring up is I've been looking at, I've been telling people a lot lately that I don't think, I believe that the precious metal stocks are trading like gold and silver are about half the value that they are currently. And now I picked Agnico Eagle in the early part of 2024 when they were trading at about $60 a share. They closed Friday at $231 a share. So they've been a fantastic pick. But when I look at the important thing that I consider is when it comes to a gold miner such as Agnico Eagle, is how are they being priced relative to their free cash flow per share? And, or sorry, free cash flow relative to the valuation of the company. And back in early 2024, they were trading at about double the multiple of free cash flow to valuation as they are today. And looking forward, see, along the way, they've made records in free cash flow for many of the quarters since 2024. And so now their free cash flow has grown so much that even though the stock has done very well on a multiple to the free cash flow, the valuation is cheaper now than it was when I first picked it. And that's what I mean by how the precious metals stocks really are the way, or investors in those really need a wake up call as to what's really happening with these companies. Because in the case of Agnico Eagle, in a world where across the stock market, plenty of companies are struggling with growing their free cash flow or even maintaining their free cash flow because they're blowing a lot of their free cash flow in the, let's say in the Mag 7 on capex costs to build out their infrastructure. Companies like Agnico Eagle are just printing free cash flow like it's going out of style. And despite that, look at the recent action. Gold is almost back at record highs, and the 50-day moving average has been going kind of sideways. I think Agnico Eagle is primed to have a substantial breakout in the near term. When I say near term, I mean near term, meaning within days or weeks, not several months. Okay. Um, Another major, I only have four majors. I'm not going to talk about Newmont today, but I am going to talk about Pan American Silver. Now, the reason that I'm talking about these two companies sort of one after the other is that I'm going to go back, like when I first picked Agnico Eagle, it was partially because I saw that gold was going to head into a series of record highs that was going to be very good for their bottom line. I recently, in the last few months, I think right about here, I picked Pan American Silver, and they basically doubled since I picked them in a very short period of time. But I didn't pick them because I thought that it would be a double in a short period of time. I think that just like we saw um, uh, Agnico Eagle substantially outperform gold during the last since it broke out above 2100 and then made a series of record highs. I think the same thing is going to happen for Pan American Silver. And I'll note of late that just like right here, as silver started to get stronger, Pan American Silver has been kind of significant or outperforming in a very short period of time. And that is ultimately why I picked up Pan American Silver. I think silver is going to $100 and above. And when it does that, I think that Pan American Silver will significantly outperform silver. And that's the beauty of having companies like a Pan American Silver or Agnico Eagle in your portfolio is you get that added torque compared to the price of gold and silver. And yet you get very good protection on the downside. Both these companies are exceptionally good miners. They have good cost controls. They make a tremendous amount of free cash flow, and they have good balance sheets. And so all of those things combined give you a very attractive torque to the price of gold and silver. Plus, you don't have a lot of downside risk. And so that's why I have investors in my audience that invest from anything from the majors all the way to down mid tiers, junior precious metals miners, developers, and explorers. But what I try to do is in each category have a really strong group. And in the case of the majors, I only have four picks. Three of those are for gold. Well, two of them are for gold, which are Agnico Eagle and Newmont. Pan American Silver is silver with gold. And the same thing could be said for core mining. So those are my major picks. I'm going to talk about one of my mid tiers. I already talked about one of them, which was Equinox, and their great news. I'm going to now bring up Alamos. Um, Alamos is another one that I picked early in 2024, around the exact same time that I picked Agnico Eagle. And they really are kind of, how do I say it, a good not contrast to each other. They are very much in the same mold. Both of them are great at controlling their costs while also making a lot of free cash flow. Now, what makes Alamos different is that they're smaller, but they have been using their free cash flow to put into growing their production, almost doubling their production, while also bringing their costs down to around $1,200 an ounce when they get their new mines into production. And so, therefore, they're taking their free cash flow to make even more free cash flow by increasing their production and bringing their costs down by about $300 an ounce of production. And as you can see, it has been, and I could think will continue to be a great pick. Originally, I started picking it at about 14 and a half dollars, closed Friday on at $52.99. It's now trading at an all-time high. It was kind of going sideways for a while there, and then it had an important breakout. Since that breakout, it only dipped down to the 50-day, under the 50-day for a very short period of time. But I'm so bullish on Alamos because of what they're doing with their production to increase that production. So they're using their free cash flow to enhance their free cash flow. And that's what you want to see in a mid tier. Um, Eris Mining had a lot of great news out. Orla Mining, those are my other two mid tiers. Both had great news out of late. And I stand by all of those as great mid tier picks. I sort of started a new category of picks in the not, in the recent past, let's say over the last couple months, where I've got what I call my unicorn picks. Then I also have my top of mind picks and my special situation pick, one of those. And so let me talk a little bit about those. One of those, and these guys are a sponsor, is of my work, is Vizsla Silver. Dot T O. Oh, not TPTO. There it is. We'll keep with the Canadian. And they became a sponsor back in the summer of 2024 when they were trading at about a buck and a half. They've had a great run since then, now trading at $7.16 a share. Had a beautiful golden cross here and have been just look at the trajectory on the 50-day moving average. I often talk about this because it's very important. When the trajectory is very bullish, it often means that the stock is going to keep going. It's a long-term trend. And even when like you see here, a pretty strong trajectory, the 200 day was still not what I would call in a bull market trend. But since then, since about the fifth or sixth month of 2024, the trajectory of the 200 day has been very bullish. So why? The reason is that they've got one of the best undeveloped gold and silver or silver and gold mines in the world called Panuco. They recently did a feasibility study and it will be a very low cost producer with a very high internal rate of return. Using current silver and gold prices, their internal rate of return is over 100%. And what's exceptional is because it's such a low cost to bring it into production of about 225 million, using current prices of silver and gold, they will probably pay that capex back within 3 months of production. So that means that they're generating about 225 million or better in free cash flow per quarter in the early days of production. Additionally, they've done a deal to cover the cost of production, or to the point that they are now have about 2 times the cost of production in the bank already looked after. They're doing underground test mining, and they're going to stockpile that material to get it ready to go into the mill as soon as they get their permits and build the mill. Now, why that is a good plan is because the one of the building blocks, if you will, of a new mine is that early production. And by having that stockpile, they don't have to worry about any problems such as getting it out of there and getting it into the mill. They'll already have a stockpile that they can pump into the mill. Now, another great thing about the test mining is that they are building a production ramp down to where they will take the bulk sample out. And that gives them a head start on the construction once they get the full permit to go build into full commercial production. And so they've got this production ramp that will already be in because of the test mining. So, however you cut it, they've got a lot of great things happening for the company, and they're being recognized for that. And I think, and that's why I call them my unicorn pick for silver. Now, my unicorn pick for copper is McEwen Inc. And McEwen Inc., I started covering the company back here in 2022, third quarter, when they were down around $4 a share. Today, they're $26 a share. And the bulk of that move has been due to their copper project that they own 46% of, and also a royalty on that mine called Los Azules, which is owned by the private company McEwen Copper. And of late, McEwen Copper has had some great news out of the Los Azules project. They got a joint venture, if you will, with the World Bank's one of the World Bank divisions that will help them to fund the development, the mountain building of the Los Azules mine. Plus, they got the RIGI program acceptance. RIGI is a large investment incentive program in Argentina to build big projects such as mines. And McEwen Copper got that for the Los Azules mine. And then they did a feasibility study that showed the cost of production of copper will be $2.11 per pound. So right now, if you use current prices, that means over $3 of free cash flow on the project, and that would represent over $1.2 billion in free cash flow based on the production that they're talking about in the feasibility study. So that makes it a great project, one that the world needs. It's in the top 10 of undeveloped copper projects in the world. Plus, they've got really good things that they're not getting recognized for on their gold mining assets. And I think that that should start to get better reflected in the price of the stock. So, as you can see, since about the latter part of the summer, they've really broken out in a very dramatic fashion from around $15 a share. This is the Canadian price, all the way up to 35. Came back down when a lot of the precious and base metal stocks were sold off recently, but only down to the 50-day moving average that they're hugging quite nicely on right now. And that 50-day moving average is at a very bullish trajectory, suggesting that it's going much higher. And you can say the same thing about the 200-day moving average. So, a lot of things to like about McEwen Inc. All right. Another of my um, unicorn picks is Goliath Resources. And they've got a fantastic discovery project in the Golden Triangle of British Columbia. Um, it is, I've talked a lot about this company's project. It is one of the best um, new high grade gold discoveries that I've seen since Pretium, which I picked when they were about $3, covered them through to when they were taken out at $19 by Newcrest, which is now Newmont. And I think they have a project that will rival that. And strangely enough, they've been underperforming their peers. They're now trading below the 50-day moving average. It's looking oversold to me. I'm a shareholder of the company. And I really think that this is a somewhat of an undiscovered gem. Now, saying that when the company has had a 52-week high of $3.54 and is now trading at $2.33, even when they were trading at $3.50, I really felt like they were still an undiscovered gem because of the quality. I mean, they've drilled hundreds of holes and found a phenomenal amount of visible gold in their drill core that covers a very large area in a mountain that I affectionately call the Golden Mountain in the Golden Triangle of British Columbia. And I think that they've got one of the new great high grade gold mines of the future in the Golden Triangle. And whenever a company gets underappreciated like that, that's when I like to increase my position. And that's exactly what I'm looking at doing. The last time it traded down to the 200-day, it's not quite there yet, but the last time it traded down to the 200-day moving average was when it was about $1.40. And then it went on a tremendous run all the way up to $3.50. It would not surprise me at all to see it do a similar thing over the next few months. So take a look at Goliath. Uh, Amex Exploration is also a sponsor of my work. I'm very thankful of that because I think they have a wonderful project that has been getting a lot of attention since about April when they started a significant breakout, had a beautiful golden cross. The trajectory of the 50-day moving average and the trajectory of the 200-day are very bullish. As you can see, they're quite significantly outperforming a lot of their peers. And I think that what really started this move was when the company started to talk about their efforts to bring the project into production in a staged way. One of the stages of that is that they're looking at a toll milling process to process a bulk sample. Now, it won't be a small bulk sample. They're talking over 20,000 tons bulk sample, and they'll be taking that bulk sample from their Champagne zone. The Champagne zone has a measured and indicated resource of 800 plus thousand ounces with an average grade of 16.2 grams per ton of gold, extremely high grade. And so that some of that material is what they're sending for the bulk sample. And so then after the bulk sample, they're already also doing a preliminary economic assessment to assess a toll milling operation to start production at the Champagne zone. The Champagne zone is one of, I think the total is five zones on the project. And collectively, they have a resource of about 2.5 million ounces. And so, but they want to focus on that Champagne zone because the company feels that they can use that Champagne zone to use toll milling. They're in a very fortunate situation in that they're in the Abitibi region of Quebec and they have several mills in the area that are operating at under capacity. So they can send the material to those mills. And because it's such a high grade, they want to use that toll milling for the first 2, 3 years of production and use the free cash flow from that in order to build their own mill at their Perron project in Quebec. And so it's a very interesting situation because of the way that they're going about doing it, they're going to be doing a production sized ramp to go into the Champagne zone for the bulk sample. So some of the capex that would go into the economics would be looked after in the bulk sampling process. So that takes away from the cost, capex cost going forward from there. And so they're doing a lot of work, a lot of drilling. They're adding to their land package. Take a look at Amex. It is my unicorn pick for a gold developer. Um, I'm down to about an hour into the show now. Let's quickly go through my top of mind picks and my special situation pick. My top of mind pick, one of those is uh, what is now called pirate gold. It was formerly until just recently called Sokoman Minerals. The big drivers of late was when Denny Laviolette came on board to take over the company. I've talked a lot about Denny Laviolette, even done great interviews with him. I suggest you check those out. Denny Laviolette is an extremely talented geologist, and that's why when he was announced, the stock went straight up, as did the 50-day moving average. And since then, the stock has been trading aggressively above the 50-day moving average. They just started a big drilling program. They've got a great land package. The 50-day moving average is on an absolutely skyrocketing trajectory, as is the 200-day moving average. And I think people are starting to realize that Denny Laviolette has a fantastic project that I think could rival Newfound Gold, which is another of my picks, which is about 25 kilometers to the east of Pirate Gold's ground. Another thing that I really like about Pirate Gold is they're doing a lot of digital marketing. Recently, they started episode one of what they're calling their treasure hunt series. And I actually did a play-by-play analysis of that video because I was so impressed with what they were talking about. You can find that on my YouTube channel at Rocks and Stocks News, or as always, you can also go to my Substack and look up rocksandstocks.substack.com, and you'll find that interview. And I believe that they have one of the most important projects. It's to the north of Equinox, which I talked about earlier in the show, along the Valentine Lake Fault. That is one of these deep cracks in the earth that go long for hundreds of kilometers and deep for thousands and thousands of meters. And these are important in these orogenic gold systems. And they have about 70 kilometers of that same crack or fault as the Valentine Lake mine that Equinox is bringing into full commercial production. And so when I talk about these big cracks in Newfoundland, it reminds me a lot of Abitibi, which is one of the great gold mining regions in the world. About 200 million ounces of gold have been produced from there. And I see a lot of the geological characteristics of at the Abitibi in Newfoundland, and Pirate Gold is a dominant player on that. I really think that Newfound Gold is going to prove to be the Abitibi 2.0. And what excites me about Pirate Gold is that they have, and Newfound Gold for that matter, is they've got large portions of the two key faults that are reminiscent of the two key faults in the Abitibi. And so I think Newfound Gold is on its way to having an important mine. And I think that Pirate Gold has a fantastic exploration opportunity. And two of the key guys that were important in the success of Newfound Gold are Denny Laviolette and Greg Matheson. And both of them are now, well, co-running, or one of them's running the work on the ground and the other one's running the corporate side of the business, but they're both very talented geologists. And so Pirate Gold's another one you should take a look at. Sterling Metals is an explorer for high grade copper that has recently made an important discovery, and then they did a big financing. Now they're cashed up to have a big program to follow up on that high grade discovery. And as you can see, they went through a golden cross here, have a very strong trajectory to their 50-day moving average and their 200-day moving average. And they got a bunch of holes in the lab awaiting assays. So those are pending. I think they've got over the next few months a lot of catalysts. And even though this company is trading at about $1.82, it still has a very modest valuation because they have a very small amount of outstanding shares on the company. So they've already had an explosive move, went sideways, and now I think they have the catalyst coming up for another explosive move in the not too distant future. So stay tuned for more news from Sterling. KLDC, Kirkland Lake Discoveries, has this vast project right beside Kirkland Lake, Ontario. This is an important part of the Abitibi because about 40 million ounces of gold have been produced from there. They also made an important discovery that had them go through a golden cross with a very strong trajectory to their 50-day moving average and their 200-day. Recently, they were going sideways when they were doing a financing that gets them well cashed up to do a 25,000 meter drill program that recently just got underway. So this company could have updates on their drill core uh, at any time now. And I love this project. Not partially because it has this large intrusion that all around it is looks like an egg actually, and there's a 17-kilometer radius to that egg. And in Kirkland Lake, intrusion related gold mining and base metals are very important. They've got a huge intrusion and they've done some minimal drilling so far on the perimeter and found a combination of high grade base metals as well as some sniffs of a gold discovery inside of the intrusion, which is really interesting. That brings up the potential around the intrusion where it's at the contact with the country rock, as well as inside the intrusion. And not far from the south of that big intrusion, there has been VMS discoveries on the project. And over to the east of it, there's been orogenic gold discoveries. So they've got a mix. And whenever you see a mix of mineralization, they have a way of being beneficial to each other because sometimes you can see overlapping or overprinting, it's called, in one deposit, let's say in outside of the intrusion at the contact. If it's close to the orogenic gold, maybe you've got two separate mineralizing systems pumping up and juicing up a zone that could be very impressive. I'm very bullish on Kirkland Lake discoveries. I'm a shareholder of all these top of mind picks. All of them except for the next. Oh no, Borealis, I am too. Borealis is a very special company to me. I started knowing about this company even before they went public. Then they had a good run early, had a cup, handle, and blast off tire to onwards and upwards. They are also a sponsor of my work, and I'm a shareholder of the company. They went through a Golden Cross here, and why that happened is because they started the process of staged steps to bring their project into production, and it's in Nevada. You don't have very many startup junior gold miners in Nevada these days, and that on its own is a very exciting prospect. But what they're doing is they had a stockpile. This was a past producer that ran into financial difficulties when gold was much lower than it is today. And so there was a big stockpile that never got produced. Just they sort of left and left all this material on a stockpile. So stage one was bringing that stockpile material onto the leach pad, and then out of the leach pad, it goes into their ADR plant where they can produce gold and silver doré from that stockpile. And they've done some small pours so far, but I think that they're going to ramp that up because in January, I think that they start bringing material from the known pits, the permitted pits that are already existing on the project. They just need expansion laterally and at depth. And then they start bringing fresh rock onto the stockpile, then the leach pad, and then through the ADR plant. Um, so they got a great project at the Borealis mine, and then they acquired another junior at a very attractive price in an all stock deal that they only had to issue about 10% of their company to that company. And that company has a project with a resource on it and a preliminary economic assessment with very attractive internal rate of return. But what the hurdle for that company is they needed an ADR plant. Well, along comes Borealis, who has their own ADR, and that was what was modeled in the preliminary economic assessment for the company that they took over. And so they would create a concentrate on the other project called Sandman, and then bring it down to Borealis and put it through the ADR plant. So they got another project. That project is open for exploration, as is the Borealis mine. And they got another project and it's all in Nevada. So Nevada Junior starting out production. They've got a good runway to keep growing their production and bringing on more assets. And they also are looking at acquisitions of projects that are not big enough for mid tiers or the majors, but would be really great assets for a junior miner like Borealis. So great business plan, great management, key shareholders like Rob McEwen, who owns 15% of the company. Eric Sprott owns about 10%. They've got Bob Buchan as their chairman. Bob was the founder of Kinross, and it had its most success as a publicly traded company under Bob Buchan's tenure. And they're just now reaching the highs in the stock price that happened well in his tenure. And so, all around, great story. Take a look at Borealis. Next one. This is a top of mind company that I'm not a shareholder of, but it's already been a great pick for me. I picked it when it was trading right around its 50-day moving average, or sorry, the 52-week low. They were having some challenges at their construction of their project. They got that all fixed up. And since that low, they've broken above the 50-day, the 200-day. They had a golden cross here. The trajectory of the 50-day is very bullish. And why this is, I always have a few companies in my pick list that are going through or gone through the development discount window of the Lassonde curve and about to go into the right side of the Lassonde curve. Lassonde curve has two big runs. One is on an exploration discovery. The other is when you bring a project into production. And just before it goes into production, there is a sweet spot before it goes up the right side of the Lassonde curve. And I always like to have some companies. Pretium was one that I picked like that. Mag Silver, Las Chispas. Back in the day when I was under the Allen Berry reports, I picked Osisco when they were about $1 before they brought their Malartic mine into production. So I love having companies like this. And this is one of my attractive ones that they're about 75% through the construction of their McIlvenna Bay mine, and they're planning on pouring their first copper in February and then bringing it into full commercial production in 2026. So I think they've got a long runway to go up the right side of the Lassonde curve. And a great endorsement of that is that Pierre Lassonde himself is a shareholder, as is Agnico Eagle Mines. And Agnico Eagle, I think that that's an equally as important, uh, how do you say it? The word endorsement of the project, because this McIlvenna is very much like geologically as one of sort of a company builder for Agnico. So for Agnico to have a big interest in Foran, I think for Agnico and Pierre Lassonde have done their homework for you, and they like the potential of how it's going to grow as it brings it into production. So it's about to do that. It's in that sweet spot of the development, the transition from development into production, and then up the right side of the Lassonde curve. So take a look at Foran mining. Okay, newfound gold, NFG. I talked earlier about how I believe that Newfoundland is going to be the Abitibi 2.0. It's got all the right geological characteristics, high grade gold, orogenic gold, and Newfound Gold has one of those kind of projects. And they've been doing a lot of great drilling lately. This big spike here happened because they were doing some infill drilling where they're going to start production. They're a developer now, and they've got a team of mine builders involved, and they put this news release out. And look at this move. It moved from about 326 all the way up to 450. It's given back only a tiny amount of that. It closed Friday at $3.93 and looks like it's ready for another rally. They just got a lot of great things going on with Newfound Gold, and I think they're a lead candidate to be a big success in the Abitibi 2.0 story that I think is emerging in Newfoundland. Hasn't been sort of recognized as that of yet, but I think it will be. And, and I think it will keep mining long after I'm dead and gone. So that's the newfound gold story. Another one that I recently started covering and immediately put them on my top of mind picks, where I'm a significant shareholder of the company. I position myself at about 6 cents a share, is 9 Mile Metals. As you can see, they went through a golden cross here. The trajectory is absolutely impressive on the 50-day and 200-day, extremely bullish. And they're trading significantly above the 50-day. They still only have about a $17 million valuation. And what happened is that their project is in the Bathurst mining camp of New Brunswick. This is one of the great VMS, volcanogenic massive sulfide districts in the world. One of the great granddaddies of all VMS mines was called Brunswick 12, which is about 20 kilometers from where they're drilling right now. And what got me so excited is that they announced a 22.4-meter intersection of via massive sulfides, and that entire intersection was completely loaded with massive sulfides. That's what you want to see in these kind of projects because that looks like high grade is going to come out of the assay. Then they followed that up with a 20-meter intersection in a step out, well, not, well, it was from the same uh, um, same location that they drilled the other hole, but at a different angle. So one was, let's say, almost at 12 o'clock, 11 o'clock on a clock. Then they went to about 10 and they hit a 20-meter intersection. And that hole was loaded up with massive sulfides, solid massive sulfides throughout the 20-meter intersection. And these are uh, geophysical anomalies that are in close proximity to an old mine. And these are brand new discoveries in close proximity to an old mine. It's a great place to look for a new mine, and it looks like they've got a fantastic new discovery. Now they are doing more drilling. They've got another a geophysical anomaly, so there's three right beside each other. They're doing a drill hole to get into that. Assays are pending, but the drill core looks spectacular. And it's true width too. They can assess this based on the geophysical anomaly and the angle that they came in at it. And so it's not like they were drilling right down the geophysical anomaly and got a 20 meter. This is true width. So those are beautiful. The geophysical magic is working. And I think that this company could very quickly have $100 million valuation. That would be over 5x its current valuation. So I think this one's on to something very great. And they brought a new guy, Mike Dufresne, on. I've known Mike for over 20 years because early in his career he was very involved in diamond exploration like I was. He's a super talented geologist. He runs a company called Apex Geoscience. They started out small, but I think now they have over 100 geoscientists on their team. So it's no wonder to me that since Mike Dufresne came on and they picked which geophysical anomalies they wanted to go after, that they're getting great stuff in the drill hole. So take a look at 9 Mile Metals. Now, before I close off today's show, I want to go to what I call my special situation pick. And that's a company called Earth Labs. Now, Earth Labs is a kind of a has two drivers of their valuation and their potential for growth. One is that they have a digital marketing platforms such as CEO.ca. They also own the Northern Miner, and its website and shows and conferences and all that sort of stuff. And the Northern Miner has been the Bible of Canadian mining for over 100 years. So they've got CEO.ca, which is kind of like a social media website for people to come and talk about mining stocks. It's kind of like the Twitter of mining stocks, if you will, or now the X, I guess, formerly Twitter of mining, which is called CEO.ca. They also own a couple other mining.com and the Canadian Mining Journal. So they got this, I kind of call it the picks and shovels, the modern day picks and shovels, because digital marketing is super important. And the mining sector has not really embraced it like it should, or well, I think will in the future. And so, as the mining sector gets into the modern world and out of the fax machine era and starts, doing a lot more digital marketing, they're going to go to those platforms that Earth Labs owns. Now, another key a driver of their valuation is their portfolio. So not what they have a fund as well where they invest in junior explorers and developers, and they have over the last couple of years put themselves into positions into a great group. Some of those I've already talked about, such as Newfound Gold, Pirate Gold, Kirkland Lake Discoveries, Sterling Metals, Borealis Mining. They also own a position in one of my gold and silver explorers with important high grade discoveries called Southern Cross Gold. So they're very good at picking companies because Denny Laviolette is the key member of their team, and he's a hell of a geologist. They've also got great stock pickers like C.J. Kim and Matt Wilson, and But what's important on their portfolio side of things is that it took them a couple years to compile big positions in a lot of really good companies, okay? And in the summertime of this year, it took until like gold went into started creating new record highs above 2100 in 2024, the first quarter 2024. But it took until the summertime of 2025 for these companies of the size that Earth Labs invests in to really start joining the gold bull market, if you will. And therefore, it took a while for those investments to start to get a spotlight on them. And in the third quarter, when they had this big run up in their stock price, was because they announced in their third quarter that year over year, they had a 23% gain in their portfolio performance over the same quarter a year before. The year before, they made about $1 million in that quarter of profit on their portfolio. This year, it was over 23 million. Now they're sitting at a valuation. They're sitting at a valuation that is about 40% of the value of their portfolio. And so now that these assets are starting to get some spotlight put on them, I think Earth Labs has a very big future ahead of it. And that's why they are my special situation pick. Now, I didn't get into my all of my majors, all of my mid tiers, all of my junior gold miners, my developers, and my explorers today. But look in the description below, and I'll put all of my current picks. And earlier I mentioned that that's a way for you to play the food chain of gold, silver, and copper stocks. And this is my curated list that I use my 30 years, 32 years of experience in the mining business, having been mentored by extremely talented people in geophysics, geochemistry, and geology. Plus, I have 20 years as a market commentator and a stock picker, and I use that to create a filter. And I try to get the best in breed in all those various categories. But I am only an idea generator. I don't make buying and selling recommendations. I do this merely for to be for information purposes and to be an idea generator. But then it's your job. You have to speak with your financial advisor to assess your risk profile. You have to do your homework because, as always, I emphasize that homework because I feel that the most well-informed investors are the most successful. They aren't, they don't trade on emotions based on fluctuations in stock prices or fluctuations in metals. They do their homework on those companies. They understand what they're investing in and why. And that kind of informed investor are the ones that I've seen over my career in mining be the best, get the best results. But that's the same in every sector. The most well-informed investors are usually the most successful. So be that kind of an investor, do that homework, have a great day, and we'll talk to you soon.